Hello there. So I am Clayton Allen, the host of the Day Trading Plumber podcast and founder of AllenFx copy trading systems. So today I'm going to do a quick video on pivot points. I'm doing this video to follow up a podcast of episode number 26, where I talked about the importance of pivot points and how to use them in trading strategies. Pivot points is no secret. It's a standard indicator that is pretty much on any platform. I'm going to show you how I use them on TradingView and how I set them up on my charts and the many ways I use them for either entries or take profit levels, pullback levels, all sorts of ways to trade them. And I'll go through a few examples here today on the charts. Don't forget to hit like and subscribe if you want to catch all of my videos here on YouTube. And, check out the links I have in the notes below. Check out the links I have in the notes below. I have a few Telegram channels, a free one, a paid one. Check those out. If you're on TradingView, follow me on there. I put a lot of good trading ideas, or at least I think they're good. If you don't, I'd love to hear from you. But yeah, let's jump right into it and let's go look at the charts. So today I'm just going to keep this video short. I'm just going to use the Euro US dollar, right? I'm going to take all of my indicators off. Let's clean this chart up. So we're just looking at a raw. Let's get rid of this. Let's go ahead and get rid of my alert. Boom. Let's just clean this chart up. I'm sure there's a quicker, easier way. Some button somewhere on here where I could just take it all off. There you go. Hide all drawing tools. Okay. So here is the Euro US dollar. Nice, clean chart, right? So I'm going to show you guys, I like to use standard pivots. Let me just turn it on and let's go through the settings here. So when you put this standard pivots indicator on your chart, I like to use the Fibonacci. There is the Woody. Don't ask me what that is. There's classic. There is DM. Don't know what that is. Or the Caramella. Don't know what that is. Okay. Let's just use traditional. Why not? Or Fibonacci. I use number of pivots back 20. Some people use 21. I like 20. Show historical pivots, right? You don't have to have this on there if it confuses you, but I like to leave it on there. Especially for this training purpose, because we're going to go back in time and I'm going to give you some examples of what I say, how I use these for trading strategies. Okay, style. You can change the colors, but this is where I show labels, so you'll see the P. I don't necessarily care about S1 and R1, so I take it off, and then I don't care about S3 or R3, but I like S2 and R2, and it'll be more apparent why when I show you guys. You could change the font, you could make it bigger, so it just stands out bigger, whatever suits your role. Okay, so already let's just look at price where it's at right now. Okay. So what I explained in the podcast and what I'm going to show you guys today is what I call, this is, I don't really call it anything. Sorry. It's been a long week, but I want to show you guys if this is an obvious downward trend, right? I'm on the hourly chart. If I go up to a daily chart, wrong way. Downward trend, right? I mean, all you've heard all you've heard is the euro US dollar is just plummeting, right? And again, I want to show you guys an example. So this works on pretty much any time frame. The daily is a lot more probable, but you're going to have less trades. And, you know, basically going down in time frames, all it's doing to you is basically limiting how many trade opportunities you're going to have. And in my opinion, it kind of makes the move smaller, and it makes the probability a little less, right? So for this, let's start out on the daily. Now that I've messed my chart all up. But so you can see we are in an obvious downward trend. The hardest thing to do in trading, but yet everyone seems to love to do it, is look for this bottom, right? If you're and I would say this is my style of trading. I look for this bottom. I'm not the type of trader where it broke this low. I mean, in this example, if you see it break this former support right here, I would be a seller. And, you know, this is a very good support line here. Let me just throw a line. So a lot of people would tell you, look for support resistance. And yes, I do trade that way. And I did call short after this broke. However, that's not today's course. Today's course is pivot points. So what I want to show you guys is when price was hovering right around this pivot and it fell and hit S2, you can see it came back up to the next week's pivot. So a lot of people use this S2 and R2 as entry points. I'm one of them. Anytime price finds itself near the S2 or R2, price tends to come back to its mean. And this is not a good example, because look at where shot right past this S2. Now, this could have been one you put your buy entry here, and you know, you can see that on that daily candle there was some indecision. So if you weren't greedy and you entered right there and it popped all the way up, came back up, you may have got a winning trade out of it. However, you probably stopped out and now you're looking for another spot. Well, on the daily, the way it's calculated, you're not going to have much support. There is no S2s. So what I want to show you guys is if we go back in history here, it worked really good here, right? You waited, hit S2, came back up, you got to this week's pivot. And then look, or this pivot, I believe this is a monthly pivot when you're on the daily. Or it's basically the average of the 21 candles. If you took 21 candles back, or 20 as I have, it posts pivot. So let's go back in time. We hit S2, price reversed. We hit S2, price reversed. Let's see if we could get an R2. We hit S2, you went through hell and drawdown, but it came back. You know, it came back. Let's say you entered here. You would have had a little bit of profit on that little spike, but you were pretty much in a losing trade. Big rejection candle, probably should close. However, depending on your position size, you could have rode this one out. Price touched S2, shot up. Never hit these S2s, went on an upward little trend here. Price pretty close to S2, reversed up. So do you guys starting to see what I'm showing you here? Hit S2, up. Hit S2, up. Let's see. Hit R2, down. Hit R2, down. So what I want to show you guys, and this is just one pair. These S2s and R2s are great entry points to trade counter trend. And, in this example, dating all the way back to November, right? Let's count them. That's a winner. That's a winner. This is a winner. That's a winner. So far, no losers. 1, 2, 3, 4. 4 winners. Came and touched it again and came back up. So we'll call that 5, 6. Hit R2. You went through a little hell, so we won't count that one. So 6 out of 7. This one touched the pivot and continued. We'll talk about that later. So 6 out of 7 are winners. Let's call this one a loser. So 6 out of 8, because you would have entered and look at the hell you would have went through, but it did come back. So depending on how patient you are and depending on how long, what your position size and how you let this go against you, let's just call it a loser. So 6 out of 8. This one, I'm going to call that one a winner because this one was more drastic. So 7 out of 9. 8 out of 10. Price hit R2 and eventually double topped. I'm going to say you would held through there. Call that one a winner. So what is that? 9 out of 11. R2 dropped. 10 out of 12. S2, you got a little push to there. I'm going to call that a win, people. So S2, if you're not greedy, you got to win. So there is 11 out of 13. It is called that a lose. So 11 out of 14, dating back to November, you would have had winning trades if, one, you're patient and you entered a buy on S2 and a sell on R2. You almost, if you guys are busy, you can almost just put a pending order there on the daily. Now let's talk about this pivot. So we saw an example here where S2, see, it came back up to the pivot. Well, here's what I like to do. When price hits S2 and you put in a buy trade, and let's just say you gave it enough room here to go this much against you, you would have just had to wait 2 days and a little bit of hell, and then you get this candle, this confirmation candle that said, yeehaw, I'm in profit now. Well, I like to use this pivot as the profit target. Here's why. Let's go back to our November. Right here, look at where it went to. Boom. Went to the P. So came down, hit S2, comes up, hits the pivot. Took profit. Price hit S2. Look where it got to the next week's pivot. That's good profit target. And as you can see, there's occasions that you could have held this bad boy all the way up to this R2. But that would have been holding a long trade, and you would have had to endure this peak back down to here, back down to there. But it's not a bad strategy. A lot of people, if you're one of those guys that likes trailing stops, enter here, wait till you're in decent profit, put a trailing stop. You would have had all this, would have came down, stopped you out, depending on your settings. Call it a win. Then, you wait. Wait till it hits R2 or S2. This is where being patient comes into play when you trade Forex. You got to have a strategy and stick to your rules. And notice how I'm not using anything but price and calculated pivot supports, calculated pivots, calculated resistance R2 levels. So let's jump down to, let's go back to let's just say you want more plays. Let's go to a 1 hour. I use the same exact strategy on a 1 hour. Now, what I'm going to tell you guys, this is the same pair. Obviously, the pivots are going back 20 hours now, not 20 days, because each candlestick's an hour. Let's get a little depth on here. So let's just say we're trading this strategy on the 1 hour, right? We would have entered a buy trade somewhere about here, right? You put in your pending order, bam. Well, look where price hit, flattened out. And then right here at the end of the week, you're loving life. Look where it almost got to, the pivot. So if you set it here with your profit target as that pivot line, guess what? Bam, there you are. Now, I want to show you, it's Friday, pretty much market's closed. You can't see next week's pivot, right? You can't see next week's S2s. So right about midweek, right around Tuesday or Wednesday, these will post. So great time to open your charts Tuesday night, Wednesday morning, Wednesday night, and start looking for these scenarios. Let's go back a little bit. Okay, here's where price hit your S2. It didn't work. So now we have one that worked, one that didn't, right? Stopped you out. And you could very well put your entry here, and you may have entered on this spike, and depending on how tight you set your stop loss, or if you're like me, you don't trade with a stop, because I trade full time. I have plenty of time to watch the charts, and I know where my mental stop is. You would have got a little bit of profit right here. Not a lot, but a little. It would have came up. Now, I'm going to tell you guys, this is obviously counter trend. So this is where I'm telling you the smaller time frames are a little riskier. So now we have two where it didn't work. Right here, it did work. Hit S2, big profit. Boom, went past the P. Didn't get to R2, so you probably would have missed this sell trade. Let's look. Here's one where you entered, you got a spike back up. You could have broke even if you were, let's just say you're wrong, you're in drawdown, but you see this comeback, so you set a stop loss right at break even. Bam, you probably would have got out even. But either way, it didn't work. So now we have 2 winners, 3 losers. Price hits S2. Depending on how tight you put your stop, you're a winner. Price hits R2. You sell it. Don't get too greedy and have too tight of a stop loss. Give it time. You got to wait a few hours, right? And bam, back down to the pivot. Right here at the pivot, like I was telling you guys, I use the pivot as my take profit, but you also could use the pivot to think, okay, we had a strong bullish move, came back down, right? Touched the pivot, that released it to continue its bullish move. So one might say, bullish, hit R2, I'm selling it, hits the pivot, I take my profit. Now you're looking, well, is it going to continue this trend? I might get some more pips out of it. But that's a riskier trade. These R2s and S2s are less risky, especially on higher time frames. Okay, so now we have 2 wins, 3 losers. So we're almost 50-50. Almost. A little off on my math. All right, no trade here. Price just, we hit R2. We would have sold it. Look at that. You go through a little pain, but it did reset. And if you were not being greedy and you were drawing this trend line, right? Hits R2, almost comes back. If you took your profit here, you would have missed this hell. This is why you can't just set it and forget it in Forex. The smaller the time frame, the more that's important. Look, if you're a trader who needs to just put some trades on, go to work, pick your kids up from school, and you just want to set, you just want to set buy limits and sell limits and buy stops and sell stops and take profits, higher time frames. I can't express that enough. You're going to have way less trading opportunities, but they have higher probability if you have a great system, and they're a little bit easier if you pick small enough trade sizes, positions, and you give yourself lots of room with that stop loss. So I'm going to call this a win because my style of trading is I would have endured this pain because I picked a small enough, and I trust the probability that when it made this move, I would have saw this next hourly candle and would have got out of it. Would have set a stop loss probably right here above that high. And as soon as this broke, walked away with a little bit of a winning trade. But more importantly, I avoided this continuation of that trend. Okay, let's keep going. R2, damn it. I'm going to call that one a loser. But it did come back. So if you endured this pain and waited, you took this opportunity to get out. You got out. But we're going to call this one a loss. S2, right? S2, you bought right here, shook you out. Now, this is an important lesson to show you guys. You would have bought right here. You would have been in a little bit of profit. This is where the psychology of trading comes into play. This big move down freaks you out if you set your stop loss to break even, because we so often want to just have a risk-free trade. As soon as it moves in our direction, it stopped you out, and then look what it did. So this is a good lesson in let your trade, I like to call them naked trades, right? You have a mental place where you want to go with your take profit. You have a mental place where you want to go with a stop loss. And even though you came into profit, it hasn't made a big move yet. And then you get this spike down, and then you get knocked out because you're being too safe. And, I hear this all the time from traders. Trading's a scam. These guys are putting too tight of stop losses. They're being too unrealistic with their take profits, and then they wonder why their trades don't work out. You can see this is a very strong support level. So when it hit here, you should assume before it makes any big break, it's going to come back to that level, double bottom, right? And if you didn't set a break-even stop loss, you left your stop loss with lots of room, you would have won this trade. Okay, here we hit R2 on the hourly. You would have gone through some hours of, did I make the right decision? Oh my God, is it going to be okay? Bam, then you got paid. Didn't quite get to S2 on this strong move. Didn't quite get there before you got the turn, so there was no trade there. This S2, you would have entered here. Price would have pulled back enough where if you weren't greedy, you would have got profit. Then you would have been in a little bit of hell again, and then you got your second chance, right? Your second chance here to take that profit. So I can't stress enough about giving your trades room. I know it's scary. I know it's hard. You're paying swap, and all sorts of mental things are going through your head, but look at how if you give it some room, not be so exact. I tell all my followers and people that I'm mentoring with trading, quit trying to be so exact. If you're not so exact, you might start winning. Start seeing some consistency. Give your strategy some room. Here's an R2. Works out perfect. It didn't quite touch it though. So if you weren't watching and you set your thing, you missed this move. Now, I'm going to tell you, I'm pretty realistic. You get in this trade, the next candle is this move down. You probably took your profit, right? It didn't go all the way to your pivot as the profit target. And then you kind of got in this. But look, if you were patient, if you planted that seed, you let it be in profit, you let it kind of come back up, but you're still in profit all the way up to about right here. Probably got back to break even. And look at what happened. Right? I mean, this is a really strong resistance line dating right here. It tested it, rejected it. Then you got this indecision between bull and bear. It got there again. And then everyone said, you know what? The bears are going to win. Bam. So if you give your trades some time, you'll get these bigger wins. But it's okay if you took this profit. It really is. But look, you take that profit, banked it, price did this wacky shit, and got back up to your resistance line again, and bam, you resell it. You resell it again here. Bam. Now you're in this move. All right, let's just keep going. This is fun. R2, loser. Right? You're out. Now, if you don't trade with stops like me, you're going to have to decide, can I wait this out? I mean, it does come back. Look, you entered here. You might have had to wait a day or two, but it came back to break even. Hell, if you waited it the whole time, you're in good profit off of it. But let's go to a smaller time frame, a 5 minute. Holy cow, where's our chart? All right, we're way over here. Now, I don't recommend this because, like I was telling you guys, here's when I recommend this. When the higher time frames, 4 hour, daily, possibly the hour, are consolidating, just going sideways on you. So let's look at this frame in time, right? Why'd you do that? Why did you do that? Let's look at this time frame, because as you can see, S2 winner, R2 winner, R2 winner, R2 loser, right? But when price is consolidating and it's like S2 winner, right? I mean, the last few hours of this week, you could have made one trade here. One, if you play these pivots, you could play these pivots too. But let's just stick with the R2, S2. So one win. Didn't really post yet, but you could see that that's a support. So we'll count it. 2 wins. No play. 3, 4, 5, 6. 6 trades in the last few hours of Friday. All winning trades. Not a lot of pips. Let's measure it. So this one is, let's just say you took it here. There's 35 pips. Okay? You caught that one. 33 pips. You catch this one. 36 pips. You catch that one. Another 30 pips. So you almost get 130 pips in the last 4 hours of the day here. But let's go up to a higher time frame, and I'll show you guys what I'm talking about. So we almost can't see. There is that. So the last 4 hours of the day, right? You can see it's sideways, right? Price is consolidating. Now, when you're looking at this hourly chart, you're like, it's in a downward trend. Well, like, look at right here, right? Let's highlight this little area, right? Now let's go back down to our 5 minute. Man, I really love how. And let's go find let's find that spot. Probably way back here. Where is it? Sorry, guys. All right, we're being dumb. Let's go to our half hour. So there's that spot. All right, here we are. Let's go to our 5 minute. Oh, did it go all the way back? Oh, where are you, spot? All right, we're being dumb. Okay, well, that didn't work. But let's look at this little area. Okay. I don't know why those came. Oh. Man, what? I just messed that all up. Jeez. It's pivot standard. Okay. I don't know where that went. Let's get rid of. Remember, we don't care about these. Don't care about that. Let's go to inputs. We wanted to go 20 and Fibonacci. Okay, so let's look at this little sideways motion. Okay, S2 win. Not a big win. S2 loser, but comes back to the pivot. So, you know, with these smaller time frames, you might use the pivot in this sideways mode as, you know, where you would sell. Hits S2, take profit, you sell from there. So you guys get the point. And, you know, I wanted to get this video out there. I know it ran a little longer, but throw some comments below. Let me know what you guys think. But this system works really well for me. It's kind of the foundation of how I trade, and you know, it's not very complicated. It's one indicator and just watching price. And depending on how busy you are or how much time you have in the day, guess what? Just go to a higher time frame, set buy limits, set sell limits, set those stops, and let the trades happen. And the best advice I can give you guys, give it lots of room. Give it lots of room to do what it's going to do, and trust your system, and you will start becoming consistent. All right, hopefully you like this. Don't forget to hit subscribe. Throw some comments in there. Shoot me a text, whatever. But don't forget to check out the Day Trading Plumber podcast. The links are below. Have a great week, and I'll see you guys next week when we hit the markets again.